kez daha merhaba. Vermiş olduğumuz yemek arasının ardından değerli konuklarımızla devam ediyoruz. Bu kez günün 3. oturumunda konuklarımız yerlerini aldılar. Konu başlığımızsa yatırımcı ilişkilerinde global trendler. Ben hemen konuklarımızı tanıtmak isterim, takdim etmek isterim sizlere. Değerli Akbank Yatırımcı İlişkileri ve Sürdürülebilirlik Bölüm Başkanı ve TÜYİD Yönetim Kurulu üyesi Sayın Ebru Güvenir moderatörlüğümüzü yürütecekler. Ve konukları ise panelistlerimiz S&P Global Market Intelligence Director, Ownership Intelligence Turkey, Dear Frederick Frank. Bir diğer konu S&P Global Market Intelligence İhracatçı Çözüm Satışları İcra Direktörü Dear Patrick Tobias. Bir diğer konuğumuzsa BNR ve Mellon, Orta Doğu ve Afrika Satış, İlişki Yönetimi İhracatçı Hizmetleri Başkan Yardımcısı Dear Tony Toma. Welcome. Ve sözü değerli Ebru Güvenir'e bırakıyoruz.
Çok teşekkürler. İşimi kolaylaştırdınız, herkesi tanıttınız. Thank you very much. I'm really happy to be actually a part of this panel, to be hosting the panel with such esteemed guests. And I guess the timing of the panel actually is quite useful for all of the IROs because we're approaching the year end and everyone is trying to plan their next year's curriculum. And in order to be able to do that, we need to understand the key themes and the trends and to be able to turn that into opportunities for all the IR programs. Obviously, the current situation is quite challenging with the global recession, the lack of liquidity globally, the higher inflation, and so forth. And especially with the increased climate-related risks, as we were discussing in the previous panel, and the market volatility, ESG has also become quite important. Actually, it's become like a cornerstone for the investors, as we have been seeing. So maybe I'll just start off with that, as we had left off before the lunchtime regarding the ESG side. And maybe I'll start with you, first of all, Toby. How do the corporate ESG initiatives and strategy match the requirements of the financial communities?
Well, that is probably the key question. And when I speak with investors and speak with issuers as well, I hear a lot that, we're doing everything, we're doing this, we're doing that. But what we found out is that there is different perceptions by everybody, just like we had over lunch just now, where we see the perception really matters. So from my point of view, it makes a lot of sense to go out and gather the feedback and gather it neutrally, so not with biased feedback, but gather that feedback and then compare in order to have an idea of like, okay, how are we perceived? How is our strategy, our communication around ESG perceived? And how do we compare with peers? And peers can be virtually anything, geographic peers, peers as in size of the company, or industry peers. It doesn't really matter. Everything has to be taken into consideration, and we have seen that most investors have their own criteria. As Andrea said very rightly, ESG investors that are just passive, they typically are driven by indices, but the active investors, they all have their own rules. So at the end of the day, unfortunately, one doesn't fit all. And that's why it's so important to have an understanding, first of all, get the perception of current investors, but also potential or former investors, and then benchmark that against the peers, and then look at the policies of the investors you want to attract and bring that together, and that will be the strategy going forward for ESG. That's the trend that I have seen, or we have seen.
Thank you very much. Actually, we are also at Akbank seeing increasingly more and more questions coming in on the ESG side, on the IR function. And what we've been doing as well, as you've been mentioning, we've been actually increasing our transparency, both qualitative and quantitative side, and sharing the ESG performance to be able to better manage the expectations as well. Now I'd like to move on to you, Tony. Could you also share some insight on the fund flows? Does the hype, ESG hype, really match the data?
Thank you for having me here. My position is unique. We're a bank, so we're not a data provider. We're more of a service provider. So that being said, we're the largest custodian in the world, so we see all the assets, and 20% of the world assets flow through us. So we have a lot of good data. So I can confirm that both ESG stocks and bonds were hit very hard during this global downturn, but I can also confirm the investors have not stopped investing in these sectors. Money is still flowing into the ESG bonds and equity names. I just came back from the IMF in October, and despite the sharp losses in ESG stocks, flows to the ESG funds were positive territory, highlighting the strong demand from both institutional and retail investors. While the borrowing costs, like you said, have been higher this year, the debt issuances have not slowed down significantly. Over $16 billion in debt, new flows into ESG funds were in Q2 over Q3, the slowest since 2019, but the biggest impact was on the equity ESG funds. Trying not to give you too much data, it's boring. Emerging markets were the bright spot for the ESG data. It was held up relatively well and supposed to reach 230 billion by the end of 22 versus 250 in end of 2021. In this market, we see specifically the sustainability-linked loan market for the banks. It's the fastest growing segment of the ESG debt universe, highlighting the role of bank lending and trade financing. The sustainable issuance debt in 2021 was in excess of 1.6 trillion, and now it's exceeded more than 4 trillion. It exceeded 4 trillion over the last decades. I'm trying to think. I think the rest is all boring data, but the flows are there.
I guess all this data basically makes us concur that ESG is here to stay.
Yeah.
It's becoming a hygiene factor in terms of borrowing and both also equity side.
Yeah.
So moving on to you, Frederick. Yeah, sure, please go ahead.
Which Andreas also mentioned yesterday, you know, ESG is extremely important, but if the underlying fundamental of the data doesn't do the trick, the best ESG won't do it either. So, you know, don't forget, you have a business to run and you have to run it decently and then communicate the ESG and it will be fine. If you just do the ESG right and you don't get your company right, you do have a problem. I think that's important to remember with all the ESG discussion going on.
For sure, thank you very much. And Frederick, now to you. In light of all of these, what sort of trends are we seeing from international investors into Turkish equities? Are we seeing similar trends for ESG stocks or not?
Yes. Hi, everyone. Thank you very much for having me on the panel. It's been a pleasure. I can basically second what Tony said. ESG is very important. It's a mega trend, and in Turkey it's also becoming more and more important, and Turkish issuers are well positioned for it. More generally, S&P Global works with the TÜYID, and we issue a quarterly fund flow report monitoring in and outflows of international investors into Turkish stocks. And we've seen consistent outflows over the past couple of quarters. I guess given the global downturn, that's not a surprise. However, there is an upside, especially this quarter. What we've seen is that actively managed portfolios actually slowed down their outflows, and the majority of outflows are driven by passive portfolios. I think that's a very positive message for IR, because communicating with passive portfolios is very different, because they need different information and you can't really control their investment. However, active investors you can control, and that's a very positive message, especially given the environment.
Thank you very much.
One comment that's very important that I failed to mention. In 2020, ESG assets surpassed $35 trillion in 2020 to become the third of the global assets under management. So it's a class that's here to stay. It's not going away. So 1/3. That's per the Global Sustainable Investment Association.
Thank you very much.
So that's it's here to stay. It's not a fad. It's one of the panels I saw yesterday at the Bonds and Loan Conference. They said it. The Standard and Chartered Bank CEO said ESG has to be in the DNA of the investor relations team and the companies. It's not going away. And you see a lot of these green bonds and everything else that are coming to market. So it's real.
Thank you, for sure. And actually, just on that note, with the increasing, obviously, importance of ESG theme and IR programs, the pandemic has also changed the way that we do business, obviously, in profound ways. And Toby, I'd like to come back to you, actually. COVID has changed in an unfortunate manner, obviously. The culture of investor meetings fundamentally, and hybrid is actually taking over, which is something that I do not like, but you know, there you go. And also, MiFID II, obviously, has giving us less support from the investment bank side. It's making it a lot more difficult for issuers, especially for the smaller companies, I would imagine, to probably like target key shareholders, arrange roadshows, and create impact with the amount of money that they're spending. So can you give some light on that? How can they actually improve this?
Sure. And well, I think, you know, let me send the bad news first. The tab has to be picked up by somebody. In the past, it was picked up by the investment banks, and now it has to be picked up by you. So the issuers have to take on the responsibility for going out there and finding the right investors and reaching out to investors. The good news about that is you are in charge. In German, you say, like, if you order the music, you can determine what is being played. And it's exactly the same thing. If you pick up the tab, of course, you know, it's not nice to spend money in the first instance, but then at the end of the day, if you spend or you utilize that money to spend it wisely, then it's actually well spent, and I would argue it helps to be more efficient and to get more out of management's time at the end of the day. So that is a trend that we have seen across the board, and yes, I mean, if you're a big company, a blue chip, then there is not enough trading volume going on that the brokers will still facilitate it. But even then, he can, or the brokers cannot meet everybody, because if the buy side doesn't have a contract with the broker, he will not see them. And we see more and more investment firms, Norges being one of them, where they have their own corporate access people, and they will not have meetings arranged by brokers. So if you want to talk to them, you need to reach out to them directly, and that is something that we have implemented also in our tool, so that you can make it more automatically. You know, go out there, find the right people, and talk to them. And the second good thing is, with COVID and the Teams approach, so to say, or virtual approach, is that you can now speak to investors that were not worth seeing in the past. So all of a sudden you could be seeing just one investors in the US, in the Midwest. You would never ever go there. Maybe you would have met him, on a conference, but then it would have been a different conversation. And now you can focus on, you know, why would somebody invest in me? Look at the fundamentals. That's a piece of advice. Don't look at the sector, because the investments are typically not sector driven, but fundamental driven. So free float, market cap, geographic location, and that stuff. So based on that, look for the investors that are out there that are looking for the niche opportunities, and Turkey is a role model. We heard it on the other model, on the other panel earlier today. It's like, you know, if times are bad, invest in Turkey. I like that approach, and that's actually what it is. You have very attractive stocks to offer. You just need to find the people that care, and that's the benefit of the new dual or virtual world, whichever way you want to put it. So to summarize, unfortunately, you have to spend a little bit of money on the targeting exercise in order to find the right people. But if you do, there is huge opportunities to talk to people you have never spoken to before that will be the right kind of investors that stay with you on the long term, and the kind of investors you probably want to meet, and not the ones that the broker wants to meet.
Yes, actually, having right access to these corporate access people at these big funds is definitely a must. And however I may not like this hybrid model, I think that does definitely give you wings to fly through different geographies without actually taking the additional burden of the travel. So definitely this gives...
And being conformed with ESG, not traveling is good for your
exactly.
CO2.
Less emissions for all of us, exactly. So Tony, back to you, as you're the data person. What is the data showing to us on this side of the story?
This one, I don't have data. I can just show you what we're witnessing. We do both DR clients and corporate debt clients. And I sit next to the market access team, like right behind me. So I'm going to break into 3 parts. Pre-COVID, what we said, it was all about physical travel, non-deal roadshows, multiple cities organized by an intermediary, usually an investment bank or a consultancy firm like Closer, which is not here today. Big cities, London, New York, Boston, LA, and Toronto, which was like, at the time, maybe like 60% of the global assets in those 5-6 cities. That stopped, hard stop, just completely stopped during COVID. Then, during COVID, they were literally grounded, no more traveling. Then the use of virtual tools like Zoom, Meet, Teams, and other technology platforms, Blue Jeans, and there's so many in the market, I don't know them all, they became necessary. And there were no more like broker deals due to MiFID, and the issuers, the investors like Lazard didn't want to pay the brokers for the meetings, and they would contact the issuer directly. So the new industry was literally formed overnight, with online meeting, client web hosting, and so that just emerged like a new reality. And we saw it when our kids in school, they had to do online learning, the same. So for people who like to travel for roadshows, it's over. So now, post-COVID, the new reality. We increased use and acceptance of virtual meetings. Technology has improved tremendously. I cannot emphasize that enough. And as well as acceptance for these types of meetings. The CFOs like it. They don't have to spend all the money now for the IR team to travel around the world. They don't really want to have the time to go do all these cities. More direct meetings by the investors. I know the head of emerging markets pretty well in New York, Lazard Asset Management. He does more direct meetings. He tells his people more direct meetings. You don't need to go to a broker. They'll call up Garanti, they'll call up Akbank, they'll call up Koch. We want to have a meeting with you. What's your availability? And we also seen this year, and probably the middle of last year, the return of the non-deal roadshow, but at the 30 to 40% level to pre-COVID. Mainly because the acceptance of the web hosting and the online and the cost for MiFID. So I'll conclude by saying safe to assume the way it used to be will never go back with 100% non-deal roadshows. And now the hybrid model with some physical, some direct meetings, and some web hosting. Investor days with web hosting is the new model. And it seems to be working.
Thank you very much. We've also been doing a lot of the web meetings. Investor days have been done virtually. I mean, it doesn't give you the same taste, but still, obviously, it gives you a bigger outreach, I guess. Back to you, Frederick. Obviously, before COVID and after COVID, we're hearing a lot of switches from active to passive, hedge funds, thematic funds, etc. I'd like to understand, how has the investor profiles changed from pre-COVID to post-COVID?
Let me go back a step. COVID has had an unprecedented impact on the stock market globally. A lot of institutional investors globally sold or had to sell because they had redemptions from their investors. A lot of funds had to sell. And basically who bought was basically, as I said, hedge funds, because they manage their own money. And also big state funds, because they didn't have the problem of redemptions. They don't manage third-party money, so they were the buyers, but everybody was very cautious. On the flip side, what we've seen is a massive increase of retail investments, mainly due to the fact that people couldn't buy anything, there were lockdowns, and people were still, or the majority, was still earning a salary. So they kind of invested that into the stock market, dealt with the stock market. In terms of Turkey, what was quite interesting to see in terms of institutional, from a regional perspective, pre-COVID, inflows were driven by international investors. US funds were the biggest group in the market. That has absolutely turned, that post-COVID, now Turkish investors are the dominant group, and as I've just explained, international investors are retreating. However, as I said before, this is changing, and there's momentum where we see that long-only funds return. So this hedge fund population was a very short-term, kind of a bad thing, where they kind of exploited the market downturn, and now long-only investors are coming back.
Thank you. Until now, we mainly, actually mostly discuss the, I would say, the equity side, but obviously there's also the debt side of the issue. I mean, increasing the cost of capital, as we just mentioned earlier, regarding lower liquidity and higher inflation, etc., also hit obviously global bond market quite well. So what could, I'm coming back to you again, Toby, what could the new strategies be for creditor relations or debt investor relations going forward, and what are the challenges?
Yeah, well, thanks for asking me that question. I think we have seen a lot of activities on the equity side for the last, say, 20 years, probably 20 years, where companies started, doing shareholder identifications, active outreach, roadshows, deal roadshows, non-deal roadshows, everything. And I guess during the last couple of years where the capital was extremely cheap, nobody really saw a need to optimize, let's say, the process of raising debt. So, and Tony, excuse me, but a lot of that was just shifted to the banks. They're like, guys, we need, I don't know how many $million at that and that date. Let us know how much it is, and then, they're depending on the bank, of course. Some banks said, okay, this is going to be like 1.2%, and then they came back after a couple of days and said, well, we managed to get it for 1%. It's a really great deal. Everybody was happy. A bond was issued 8 times oversigned and got out the door. And I think now with the capital becoming more expensive or the coupons becoming higher, I see a trend similar to equity. So it does make sense to identify your bondholders. And I would like to raise that question to everybody in that room. Who has done a bondholder identification? I'm not asking because probably nobody would raise his hand. But I think it should be done. I think it should be done. A bondholder ID makes a lot of sense. And we discussed that last night over dinner. I think it makes a lot of sense to understand who your bondholders are. I can tell you from the data that we have from iBox, your bonds are not buy and hold. They are being traded, they are being frequently traded. And because the market is so intransparent, you cannot see it. So my absolute belief is it does make a lot of sense to know your bondholder, identify them, see who has bought into the bond and sold the bond after it was being issued. So it makes a lot of sense to look at the primary allocation list and then 6 months later to look at the list who are still there. And you will see a significant turnover and shift in ownership. And there will be people on that list that you weren't even asked to be on the primary allocation list. And that's where the responsibility of the issuer comes in, where the issuer needs to go to the bank or to the facilitator and say, we want these people to be included as well. And then communication means more transparency, which means lower risk. Lower risk means lower cost of capital. It's a very straightforward thing. And if you calculate well, it's not even percentages, basis points, over the course of a 10-year or 7-year or whatever bond, 500 million, 600, 700 million, that is a lot of money. And I can only urge you not to leave the money on the street. That is where you can easily save a couple of 100,000, if not millions, through the course of the year, much more than you could possibly spend in services like a bondholder ID or bondholder targeting, or, you know, at the end of the day, we were talking a lot about ESG. The bondholder does care about ESG as much as the equity holder, because, you know, it's a question of risk. So how are you going to communicate your story if you don't know who your holders are? And I think it should be done by everybody, and I guarantee you it will pay off at the end of the day. And I think, and I hope, because as you can see, I'm very passionate about this. I hope there is a trend to, you know, be more proactive when it comes to bondholder investors than it is right now.
I must agree. I mean, I think that especially on the ESG side, actually fixed income investors have been the main push on that side. Equity investors have actually, you know, got on the wagon later on and just catching up with the trend, I must say. So in light of all of this, what are you seeing on the issuer side?
The issuing, as we said, the global shocks really killed it this year, especially for the emerging markets. The rising interest rate, the commodity prices, high inflation, avoidance of emerging markets. I'm a salesman for debt and equity, so the volumes are down 75% on the debt side for the Middle East and Africa region, and actually globally. Debt issuance has been down 75% year to date. However, in this last 3 weeks I've been on the road, we've seen a pickup of interest now. And there's reasons why it's down, like we said, because the market. However, ESG sustainable debt issuance are actually it's less down than the others. They're all down, but ESG sustainable debt issuance is less down than the others. On the equity side, we do see the only bright spot in the world is the Middle East, primarily Saudi and UAE, with a ton of IPOs coming to market. And they're not issuing debt because they're flush with cash with the oil prices high. And we did have 3 new deals out of South Africa, came out of nowhere on the equity side in different sectors, including gas. So it's coming back slowly, but this year was a tough year for the issuers or the service provider like me, with the debt issuances down. So.
Fingers crossed for the new year, let's say. Before concluding, Frederick, I'd like to come back to you because you are working on this product that actually probably most of us are using here and finding it quite useful, the quarterly Turkish fund flow report that you prepare in collaboration with TÜYİD, actually, and you mentioned about it earlier. Now, taking all of the discussions that we have done so far in the global challenging environment, can you give us the magic tool for bringing new investors to Turkish equities?
Thank you. I wish I could, but as someone on the panel before me said, that's the $10 million question. But there is some hope. As I mentioned, the outflows of active investors have slowed, and it's very important. What we've all been talking about is the ESG side. So yes, there is right now is challenging, but what you can do is prepare your ESG story and get this right. Obviously, as Toby mentioned, if the fundamentals are not correct, your ESG story won't save you. But basically what you can do is you can prepare yourself and the story for when things are picking up and that you are ready, and then it really makes a difference, as we have learned. Then there is ESG in terms of passive investments. So passive investors have a very different need of communication. It's kind of a belief that as an IR department, you can't really talk to them, but I disagree, because they're very much an audience of IR events, but it's a different kind of communication. They don't need the investment fundamentals, because they don't make the decision, but they're very keen on corporate governance, on ESG factors, and when you communicate those and report those, that you should see some support and influence from passive investors. That's very important. And also, as the Institutional Investors magazine concluded, services like keeping your fingers on the pulse with the perception studies, shareholder ID, and just to be able to act faster and to kind of more challenging environments. That's my advice.
Thank you very much for all your valuable insights. I don't want to, if we have time, we can take maybe a question if you have any questions. Yes, Miguel?
Hello? Yeah. So we talked about ESG a lot, but my question goes out to a different aspect that we do, which is the AGM. What I've been hearing a lot is that investors want to know more about ESG at the AGM and have certain requirements that they want. Is that something that we should here in Turkey start focusing on? What would be your suggestion?
If I can, my view on that question is definitely so, because you know, we all know that ESG, the last G stands for governance, and governance is what you have to. Well, you have to do it all the year through, but that's where at the annual meeting, that's where you you know, present that you are sticking to good governance and stewardship. And this is why I think it is extremely important, and we've spoken with a couple of companies here in Turkey where it was absolutely clear that ESG is not something somebody does somewhere sometimes, but it's on the agenda of the supervisory board, it's on the agenda of the CEO, CFO, of the whole managing directors, and that is extremely important, because that's what it at the very least should be across the board, and that's just what you have to stick to. So thank you very much for that question. It's a very good point, and I think the whole proxy solicitation and governance, governance, whatever, that's really something that is extremely important, and if you don't get that part right, then you have a serious issue. So I think it should be a topic for the AGM, but it should also be a topic throughout the year, and as a matter of fact, we organize a lot of governance roadshows where the head of the supervisory board speaks to the investors, be it about remuneration, be it about just anything around the governance topic. So it's extremely important, and I presume there will be more of a focus around that here in Turkey as well. Thank you.
In the US, I see a lot of chairman messages. Before the AGM, the chairman's letter on the operations and the growth. There's always a section on what they're doing for ESG. Our building is 100% ESG compliant. We took away all the printers in the building. We have an ESG clearinghouse for any new business we take on at our bank. We can't take on any new business unless it gets cleared for ESG, and it's real, because I just got rejected for a coal mine in Kazakhstan because they produce black coal and it's the bad coal. So it's real, and it's usually in the chairman's message, at least in the US. I don't know how it is globally.
Thank you. I guess we're running out of time. There's another panel waiting to come up here. So I would like to thank you all for sharing your valuable insights. I'm positive that this would definitely shed light to the next year's IR programs, and thank you all for listening.